We all have our reasons why we are on this track. Oh, we all have our burdens, yeah, but we just keep on fighting and we never look back. Here we go, 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 let us heal and grow. You won't be alone, we're unstoppable. Don't be afraid to show what we're going for. This is what we know. Here we come back to life, we're still breathing. Standing up, everybody's gonna see it. Oh, all you need to know is that we're holding on. Even if we fall, we will rise up and we follow the path that we believe in. No, we're not gonna stop until we reach it. Oh, all you need to know is that we're holding on. We rise up from the dust and claim our throne. We rise up from the dust and claim our throne.
Good. Hello. Hope you guys are doing well. So let's just start.
We rise up from the dust and claim our throne.
So let's start. We'll be talking about market structure today. We'll be talking about market structure, mastering market structure. Maybe I think I won't mainly focus on gold. But okay. Okay, let's just go through gold just slightly. Let's go through gold slightly before we even continue to anything else. So, if you want to master market structure, the best time frames to use are very high time frames. Don't focus on smaller time frames, because smaller time frames end up they can end up leaving you in trouble. Okay, in whatever asset you're trading, just know that smaller time frames will end you in trouble. They'll leave you in massive trouble. So if you want to succeed in successful trading, then the best advice I would give you is to understand what is happening in the higher time frames. As long as you're beginning, try to at least draw a trend line or something of the sort that can guide you. Because here's one thing that you need to understand, okay? Trend lines do work, okay? They work as a form of support. They do work as a form of support, but they're risky, okay? Trend lines are risky to trade, but they do work as a form of support. The thing that you need to know about trend lines is, once you have your trend line at a good, okay, the very first thing that you need to do is, when you're plotting your trend line, there's two ways to plot trend lines, okay? You can plot your trend line starting from body to body all the way up, okay? You can maybe say, I'm going to be plotting my trend line body to body, okay? Body to body like this, okay? It's going to be touching body to body all the way up. But the best advice I would give you, if you're starting out, do not focus on body to body, okay? Do not focus on body to body. What I would like you to do is go to the far end of the wicks and make sure they touch each wick like this. This is a good example, okay? Make sure they touch each wick, because when the market wicks out, it's going to come into this zone, okay? It's going to come into this zone. So make sure that when you're drawing your trend line, which is going to act as a support, make sure that you draw your trend line aligning with the wicks, okay? Aligning with the wicks. Have at least a trend line to at least guide you so that you can understand what is happening, okay? What is happening. So like right now we're on the daily time frame. This is gold. We've been steadily pushing to the upside. We had consolidation at the start of we had a sudden consolidation at the start of the year. When was this? This was 2023. Yeah, we had this consolidation. Then we broke out. We broke out. Started the year, and then we had another consolidation, and now the market is continuing with its direction to the upside. So what it's doing right now is retracing. But where is the market retracing to? That's a question that you need to keep asking yourself. Where is the market retracing to? What are the key areas that can guide me to at least make some bucks from this, right? So your focus is going to be on two things. Focus on two PD arrays. Don't focus on a lot of PD arrays. Don't focus on a lot of information. Just have 2 or 3. Okay, if it's max, have 3 PD arrays. Most have fair value gaps. I think I told you on the last session. Include fair value gaps in your trading criteria. So fair value gaps as one PD array. Have order blocks as a main PD array, and you can have breaker blocks. Okay. But for me, I focus on two. I focus on order blocks and fair value gaps. In fact, when the fair value gap is tapped, let me give you an example. Like this, okay? There's this period when the market actually tapped into this fair value gap. So if I keep this in mind, if this market is to come back into this area, then I'm not going to expect it to go far, because what I'm going to expect it to do, I'm going to expect it to come into this order block. Okay, I expect it, because you can take note that this market actually mitigated into this fair value gap. There was a slight mitigation into this fair value gap. You can see it right here. Okay, there was this fair value gap. The market came into it before it pushed to the upside. So the next time the market comes into this area, okay, into this fair value gap, I will not be all in or to buy around here. No, what I'm going to do is wait for a stronger entry. And where is going to be that stronger entry? The stronger entry is going to come from this zone right here, where we have this order block. Okay, we have this as an order block. Not only that this is an order block, but also if you focus on this area alone, if you focus on this period alone, you can note that this day, on this period of time, we had a consolidation, and market touched into this zone. This is once, twice. Okay, let's see, August, September. Yeah, the whole of August. Let's say August and September, a full 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Okay, so a period of 19 days, the market was stuck within this zone. So this means that this is a consolidation area. So if the market is to come back, it could come back to test this area, okay, as a break and retest, okay, because this is where the market actually took off from. Okay, so it can come into this area as a form of break and retest, okay, as a form of break and retest, because the market already broke out of this consolidation. We didn't get a clear retest. We had a retest, but not a clear retest. So if this market decides to come into this zone, it will not be, we will not regard this as we're not going to regard this as break of structure. We're not going to regard this as the market has broken out and now it's going to keep going down. No, we're going to just look at it to a perspective of the market can come into this order block right here, as a form of wick. We're gonna see some strong rejection candle like this, which can end as a pin bar. So it could come into this order block right here, because this fair value gap has already been mitigated. This other fair value gap has already been mitigated. Okay, it has already been mitigated. So our main focus is going to be on this order block. Okay, this order block is going to be our main focus, and this order block is at a very strong area. So what I'm going to do is I'm going to wait for the market within this zone to get a clearer entry to continue to the upside. Now let's take our Fibonacci tool. We're going to drag it from from the low. Okay, the low that was created during this period. Before this, let's take it as this area right here, or yeah, let's begin it from here. I'm going to begin it from this order block. I'm just going to start it from this order block instead of starting it from under the order block, because I could start it at this double bottom that I'm seeing right here. Okay, I could potentially decide to start it at this double bottom that I'm seeing right here, but this market coming into this zone, it's not really going to happen. It's not really going to happen anytime soon. 23, it's not really going to happen. I don't have expectations of the market coming into this order block, but I have, because the market is still bullish. Okay, and this is quite far, so the market is still bullish, but it could, anything can happen. Okay, anything can happen. As I told you, as I previously told you, during wars, it reaches a point when everyone thinks that the market just you buy when there's blood in the streets. As long as you've been trading, you'll come and realize that there's a certain point where these wars don't take effect. The market actually stops moving. When you realize that the market is actually finding it hard to break past a certain zone, a certain all-time high that it created, and we're in a period of war, just know that the market is going to retrace hard. And I think I kept telling you this since we were this period. I kept telling you that this market might keep dropping, and it might keep dropping to a really far distance. To even I had anticipated it at 24.75, even slightly below 24.75. Okay, I had anticipated it around here 24.60. So here's what I expect. Okay, here's what I expect: this market to come into this order block, or at least come and cover this fair value gap right here, where we have our 0.786. okay, our 0.786, which we will also come and we'll also realize that our 0.786 zone right here is also the mid of this very strong support zone. Okay, it's also the mid of this very strong support zone right here. So what we're going to do is actually, we can wait for the market to come into this. Maybe it comes and touches into this order block. We get a rejection, which is going to settle around here. We get our buy from that rejection, because we are sure that the market will not come and test it again. And then now we take it long term to the upside. Okay, to the upside. There's that as one that we can use. There's this as one that we can use. Okay, this area we can also capture some buys from it. But for me, I'm going to focus on this area right here. I'm going to focus on 2340s. I'm going to focus on 2340s, 2348, around here. Okay, this is where I'm going to be focusing on mainly, and this is where I would like you to focus on mainly. That's why I told you that I'm not really going to focus on gold for this specific period of time that we are in, that this current period of time that we are in. I'm just going to let my runner run. Okay, I'm just going to let my runners run. Why? Because I believe that everyone has it in their head that this market it's bullish, so it has to just keep going. It has to just keep going, because I don't know, ICT says the market has to the ICT says the market will keep going, or something of the sort. I heard someone saying something of the sort. Well, here's the thing, but I don't think ICT trades metals. I think he trades futures. But either way, I think what I'm trying to say is, just let this market play out. Be patient. Let this market play out. Let it come into this 4-hour order block. Okay, let it come into this. You can see this right here. At this 40 zone, we have a 4-hour order block that hasn't been mitigated into. Well, we were thinking we have an order block here. Sorry, we have this 4-hour fair value gap that hasn't been mitigated into. So what we need to do is let this market come and liquidate this low that was created during in the daily fair value gap that was actually tapped into. Let this market come into this zone, then we buy it to the upside. Okay, let it come into this zone, we get a rejection block, and then we drive it to the upside. So that is as easy as that. So for now, I'm just going to let my runners run, and I'm going to let it continue running to the downside. I'm going to let it come into this zone right here. Okay, and if you check on the volume profile, you come and realize that at this zone right here, this is where the market is actually targeting to come into. Okay, for this week. This week the market is actually targeting to come into 2550. Okay, 2550.85. This is the exact zone where the market is actually coming into. So what you need to do is let it run. Okay, you can either wait for the market to break into this zone, or maybe a retest into this zone, or a retest into this order block right here. Try and sell it to the downside and let it run. Okay, or you can sell from 26.12 as the morning entry that I gave you guys. You can sell from 23.12 and just let it run. Okay, let it run. We have 25.95, which is a strong zone, which will actually send this market to the upside, because you can see this order block that is right here. So this market will actually react to this order block. You can expect this market to react to this order block, maybe push it to 23, 26, 24, or maybe around here at this PO, this value area low, 26, 29, and then we get now a full retracement back into this zone, and then we buy it. But be patient with gold. Be patient with gold. Let it come into 2550. Let it come into 2550, 2548. Let it come into that zone before you take any entries. Okay, now now I'm done with gold. Let me now go to Nasdaq. Okay, let me go to Nasdaq. Let's talk about Nasdaq, because I was just mainly focused on today. I was mainly focused on explaining to you guys about Nasdaq, and I was mainly just bound to explain to you guys about Nasdaq and Bitcoin. Okay, especially Nasdaq. Trading Nasdaq is the easiest because it respects structure. Okay, Nasdaq respects structure. That's the best thing about Nasdaq. So here's one thing. Here's one thing about. Here's one thing we can take notes of. Okay, so this market was in some sort of. It was in some sort of uptrend. You can see it. Okay, it was in some sort of uptrend right here. Okay, we were in an uptrend. Then this market changed character right here. Okay, you can see it. This market changed character and started selling to the downside. Let me show you so that you can see it more clearly right here. Okay, change of character. For those who do not know change of character, here's one thing. So when the market is, let's say, let's delete this. Okay, so when the market is on an uptrend, let's say the market is on an uptrend, you're going to see it creating. Let me get this too. Let me get the path through. You're going to see the market creating higher highs and higher lows. Okay, you're going to see the market creating higher highs and higher lows. Okay, let me just show you more clearly so that you can see it. You can see this. Okay, the market is creating higher highs, higher lows, and continues creating a new high. Okay, so when it creates a new high, this is a break. We regard this as a break of structure. And when it creates a new low, okay, it creates a new high, we get a break of structure. What we do is wait for a retracement. So that's a correction, impulsive move, corrective move, impulsive move, and then corrective move. But now this correction that you can see here, this correction that happened here, came and eventually took out, okay, it came and eventually took out these lows. It didn't take them out here. Here it created equal lows. But it eventually came and took out the lows completely, creating a change of character on a very high time frame. Okay, on a 4-hour time frame, we can see that it created a change of character. So what are we supposed to do when we see that the market has created a change of character? We're supposed to close all our buys that we are taking. And now get into sells. Okay, we're now supposed to get into sells. Why? Because the market is going to now be targeting the trend line liquidity. Okay, the trend line liquidity that is resting on this trend line right here. Okay, liquidity that is resting on this trend line. So right here, this is liquidity. This right here is liquidity. The market is going to try and grab that. This is liquidity. The market is going to try and grab that. This is liquidity. So we, as from here, you can take note that this market actually grabbed this liquidity from here. This market grabbed this liquidity, okay, right here. It took it slightly, and then just continued pushing to the upside. So immediately that happened, and we were seeing now the market was creating now new highs. So when it was coming down, it was creating lower lows and lower highs, lower lows and lower highs, right? So this was the last lower high, right? This was the last lower high, and then this was the lower low, and then this was the lower low, which we had within this lower low. We had relative equal lows that also act like what you can call a double bottom. Okay, a relative equal lows that act as a double bottom. This is a reversal pattern. Okay, this is a reversal pattern that formed right here. In Nasdaq with patterns, it works. Okay, Nasdaq works with patterns. That's something that you need to take note of. Nasdaq works with patterns. Patterns do work with Nasdaq. That I won't lie to you at patterns don't work with Nasdaq. Nasdaq patterns work. So right here during this double bottom that formed, we saw a break of this neckline. Okay, we saw a break of this neckline, a retest. Okay, immediate break of this neckline, a retest, giving us this red candle, and immediately a rejection. So right here, once we got this confirmation, and we have a fair value gap within this zone. So let me show you this. Okay, so we have a fair value gap within this zone, and we're trading. We're now looking for the market maybe to create. We were looking for the market maybe to come into this zone. Okay, into this area to just create this area maybe where to mitigate into this area where we have this order block, and then continue to the downside because it was creating lower lows and lower highs. So we're expecting to take the market from this order block right here, drive it to the upside, but not far. Okay, not far. The plan was to take a long position. So we had this break of the neckline, retest of this fair value gap right here. So we buy it to this order block right here. Okay, we buy it to that order block right here, covering. We keep in mind that we are trying to cover also this fair value gap that is right here. So what do? We take a buy order only up to this zone right here. Okay, a buy order up to this zone right here, and that's where we look to close our trades. Okay, that's where we look to close our trades, because now we expect from this zone the market will react maybe to this order block, and then we would see it going down. But what happened is the market, instead of reacting to this order block and going down, we saw the market actually breaking past this high. Okay, we saw the market breaking past this high, and we are on a high time frame. So that gives us more detail that this market is actually going to keep buying. Okay, this market is actually going to keep buying, because now we have seen a break, we have seen a change of character. We have come now from these lows that we are creating. So let me draw a trend line for you. Okay, there was these lows that we are creating, lower lows and lower highs that we are creating. You can see them clearly right there. Okay, so there was this trend line that we were creating. You can see the market was playing within this trend line, and then the market was playing within this trend line, and then we broke out, had a slight retest, but this wasn't a clear confirmation that we have broken completely out of this trend line, because we were looking at this order block as a mitigation block where we can get in, where we can tap in and then sell the market to the downside. But instead, the market broke completely out and kept going to the broke out, creating a change of character. So what do we know now? What do we keep in mind that is going to happen right now? From here, we keep in mind that now the market has started creating an uptrend. Okay, now the market has shifted from a downtrend to an uptrend. So what are the key areas that we can take note of? There's this fair value gap that we have right here that we can take note of. There's also a fair value gap right here, but this fair value gap was mitigated into. You can see it was fully mitigated into. So which other fair value gap is left? We have this fair value gap that had a slight mitigation into, but not a full mitigation into. So the market could come back into it. Okay, it could come back into it. We had a slight mitigation into it, and then it drive to the upside. So it could still come back into this zone. So this becomes our area of interest. What else can we use as a form of confluence? Okay, as a form of confluence, let's start. We can use our Fibonacci tool as a form of confluence, right? We're going to drive it all the way to the high that was created. We don't look to sell, okay? We don't look to sell when the market starts creating. When the market starts creating, new shift the trend, we don't look to continue with it. We look for the market to retrace into a zone that we can use. You can see clearly that the market retraced into this fair value gap. This fair value gap right here gave us a couple pips, and then it kept going down, completely mitigated into that order block. So it showed that it wanted to completely drive into this order block. So let's get the reasoning as to why it wanted to drive into that order block, okay? So we're going to come to our Fibonacci tool. In my Fibonacci tool, these are my key zones, okay? These are my key zones. These are my key zones. I'm going to show you my key zones. This area right here, this entire area from 0.5 to 1 right here, this becomes my extreme discount. This becomes my discount area, okay? This becomes my discount area. So this becoming my discount area, I'm going to be looking to buy within this area 0.786. This becomes my extreme discount area, okay? This becomes my extreme discount area within this zone. And 0.618, within 0.618 and 0.5, between 0.618 and 0.5, this zone becomes my discount area, my normal discount area. So I'm going to be looking to buy within this area, okay? I'm going to be looking to buy within this area. So what details can I take note of that are happening within 0.5 and between 0.5 and 0.618? We are going to find that we have our order block that is at 0.618, right? We have our order block that is at 0.62 right here. We have this order block that is right here. So our focus is going to only be on this order block that is also at a key zone, okay? This is our extreme discount area. I'm going to mark it out. I'm going to note it down so that you can take note of it. So this 0.786, that becomes my extreme discount area. But if the market could drive into that area, that will become a stronger zone. But why am I going to focus on zero? Okay, let me just mark it out. Extreme POI. Okay. So why am I going to mainly focus on 0.618 and 0.5? Because within this zone, we're also close to our trend line. Okay, we're also close to our trend line. So that will be almost like a full retracement into our trend line. Another thing is within 0.786, we have our order block. We have our order block within 0.786. That is our extreme point of interest. So I'm going to mark that out. Okay, I'm going to mark that out like this. Okay, simple as that. You mark that out. Okay, so you have two entry areas that you can get your entry from. Okay, always expect a reaction between this zone. Always expect a reaction between this zone. So we have our order block. We have our we have our fair value gap that is within this 0.618 and 0.5. So we are going to start with that. Okay, we are going to start with that. We never fear taking risk. So we're going to start with this order block that is right here. Okay, we're going to start with this order block that is right here, targeting the break of structure. We're not targeting, you can target higher than the break of structure, but for now we are targeting just the break of structure. Okay, we're going to target just the break of structure, and our stop loss is just going to be around 40 pips. Okay, just below this area right here. While we also have our second zone where we leave another limit order within this zone. So there's two ways you can take this. You can actually decide to, instead of put stop loss here, you can decide to put a wide stop loss. Sometimes I do this with gold. You might realize sometimes I do this with gold. When I do this with gold, it's because I have two zones that the market could actually come into. So what I do is, instead of letting the market just sometimes it might tap into one zone and just run into the zone that you were targeting, right? So instead of that, just enter, put your stop loss wide enough, and then have this other zone as another key area where the market could actually come back into, tap into, where you're going to add a position. You just leave your limit order right there, so you can have just two orders right there. So you have your entries around here, and you have your entries around here. So what you do is just let the market run from there. If it comes into this zone, taps into your buy limit, take it to the drive it to the upside. But for this case, the market only focused on this zone. Okay, so we can see the market only mainly focused on this zone, and then instantly, but with Nasdaq, I always tell you, risk 40 pips, 75 pips are max. Okay, so we could see the market drove into this break of structure right here. Okay, it drove into that break of structure. We close our trade from there. 1:6, a fully achieved 1:6.5. You close your trade from there. Okay, that is a good trade that you've made. Okay, that is a good entry that you've made. While you leave a runner. Okay, or you'll hear me telling you this multiple times. Always leave a runner, because if you're in a let's say you're in a newly formed uptrend, you got a break change of character. Now you have a break of structure. You leave a runner, because if you're in an uptrend, that means the market will keep going up, but you don't know where it will keep going up to. So you take profits, but you leave like 30% running. Okay, you leave like 30% going to where it's supposed to be going to. Okay, so now we have this. Okay, we can clearly see we had our first break of structure. We come and calculate that break of structure. It's as simple as that. We come and calculate this break of structure, calculate the distance. Okay, calculate the distance. So sometimes I do this, calculate that distance, and I just come and put it right here, and you'll realize that the next time there was a retracement, it happened. The next time there was a retracement, it happened after exactly the same period. Okay, the same period. So in my next target, this is today's entry that we actually took. I am going to be targeting right there. You can see that. I'm going to be targeting right there. Where I'm targeting there is, for one, I expect the market to come and liquidate, take out. There's this trend line liquidity. I told you, when the market is on a trend, the top wicks that you always see touching those trend lines, that is pure liquidity. There's orders that are there. The people are waiting to sell from those zones. So the market is going to be targeting those zones. So what am I going to do? I'm going to be targeting that area, the market to come into that area where people have their sell orders. So that's what I did today. But what did I do? I waited. I was waiting for this market. During this week. This entire week, after NFP, we traded NFP. After NFP, I was waiting for this market to maybe come into. We're going to take our Fibonacci too. Okay, let's just take our Fibonacci too. I'll tell you why I did not take the trade from this area. Okay, I did not wait for the market from this area. Now here's what happened. You're going to realize that the market actually bounced from 0.382. That's where the market started to bounce from. It started from 0.382 and just kept pushing to the upside. And you're going to realize that most stocks during this time, they're just going up. So what am I going to do? I'm going to keep in mind that the market hasn't come into my clear zone where I like, where I say now this is what I like. This is a zone that I like. Okay, so I'm not going to focus on that. So what am I going to focus on? I'm going to focus on small details to see if they can lead me to where the market is actually going to. So in this zone, you're going to take note of, there was this consolidation zone that was happening right here. Okay, and then the market broke out, retested it. So if the market did this, like there was that example that we had, and that was down there, somewhere around there. It was somewhere around this side. I think I was showing you around, somewhere around down there. Where was it with gold? When the market leaves this, you can expect it to come back. If the market was in a consolidation zone, you can expect the market to actually come back into that consolidation zone. That's why sometimes we use what we call this right here, fixed range volume profile. You just started from where the consolidation started, and then you ended to where the consolidation ended. You're going to see the area where you can expect the market to come into. This becomes your value area high, point of control, value area low. But I'm not going to go into that, because this is a very small consolidation that happened around here, but I'm going to take note of that consolidation because there's this area right here that we are waiting for the market to at least come and mitigate into. The market did not come and mitigate into this order block, these fair value gaps right here. So where did it bounce off from? We can see it bounced off. It came and retested this consolidation zone that we had here, and it just kept going up. We did not take our entry from here. So what we do is we study structure. We study what is happening in the market. Okay, we study what is happening in the market. So the very first thing that we take note of is there's this double bottom that has been created right here, and then a break. We have this double bottom created right here, and then a break of the neckline. As I told you, US Tech always, when you see a pattern, just know it's going to work with that pattern. It always systematically works with the patterns. It always, I don't know why, but it always. And this was during NFP. So, and we took this entry. I think I gave you guys this entry. I gave you guys on WhatsApp this entry. I told you let's buy Nas. I'm buying Nasdaq. I think I showed you I had 3 entries on Nasdaq, and then I deleted one because I had more entries on gold, which if one would have gone on loss, it would have been a disaster. So here's what happened. We could see that the market during NFP, after this break, after we got this break of this NFP actually closed above this neckline. Okay, we saw NFP closing above this neckline. We took this buy, and then I closed it right here, and then the market rejected. I wasn't here, I wasn't around when the market did this rejection, when the market created this rejection candle. I had already closed. Then the market kept going to the upside. So what do you expect? From my perspective, is you're going to expect the market to keep going to the upside, but you cannot buy from here. Okay, you cannot buy from here. Why can't you buy from this zone? One reason why you cannot buy from this zone is because we have an order block right there. Okay, we have an order block right there. So you let the market play out. What happened? We came and saw the market drop down, retrace from that order block. We still let it do its thing. Okay, we still let it do its thing. It came and mitigated into this other order block. We let it do its thing. It did not come and take this. It did not come and take these lows, these equal lows that were created here. So we were still expecting the market to come into this zone. But sometimes the market usually just comes slightly into this after a break of structure. Sometimes it just slightly taps into it and then goes to the upside. But I cannot make my entry here because I do not have a solid confirmation as to why I need to take the entry from this zone. So what am I going to do? I'm going to wait to see the market break out of this zone. Okay, I'm going to wait to see the market break out of this zone with volume. Okay, I'm going to wait to see the market break out of this zone with volume. Okay, not just break out, but break out with volume, because we expect the market after NFP. NFP creates direction for us, so the market is still going to go up. Okay, we're still going to see the market going up. So what are we supposed to do? We're supposed to see which point is it, which point has the strongest rejection. We come and find that this point is the area, this area it is the area that has strongest rejections. This is where most candle bodies were. You can see most candle bodies. Here's the candle body, here's the candle body, rejection week, candle bodies, rejection week, candle bodies around here. So where we're going to be waiting for the market is a break, a strong push to the upside. So what did I do? I was right here waiting to see how this market comes in. I was on a lower time frame. This market came with a solid strength. Once it got this rejection, I told myself I'm not getting in yet. Okay, I'm not getting in yet. I'm going to observe it, I'm going to wait. Then the market started coming in with strength. Okay, once I realized this market, the volume is coming in with strength, I shared this signal immediately. Okay, I shared this signal immediately. I took my entry from here, but I made sure I gave you the entry when this zone had just been tapped with a strong break. I knew that the market is going to keep going up. immediately, and we cashed in 190 pips. And I told you, let's take 190 pips. Let you guys take 190 pips, because we have an order block right here. The market could react from this order block and just decide to keep going down, because I told you there's still these zones that haven't been mitigated into. So the market could just step into this order block and keep going down and then come back to the upside. So what am I going to do? I'm going to I told you guys to just leave, just close your trades from there, and then we're going to take our entries tomorrow. But for me, I left runners. As always, I always tell you, when I'm trading towards one direction, I'm always going to leave a runner. Okay, it's because when the structure is favoring me, the runner is also going to favor me. Look at this. So let's say this runner, okay, this runner that you took a runner, you left a runner from here. This runner, here it is. It keeps going up, and as we can tell, the market is still on an uptrend. So as long as the market still goes on an uptrend, you're still going to be making money. You're still going to be making money from that runner until the period you're going to spot a change of character. Then you close all your buy entries and now start going to a sell until the next time you get a buy entry. Okay, so always leave a runner once you have a good structure. Okay, right here I couldn't allow you guys to leave a runner because we do not have a good structure around this zone. We do not have good structure around this zone. If it had tapped into maybe 0.618 or 0.5, we bought from a premium area. Okay, this market actually bought from a premium area, so we cannot actually rely on premium areas to buy our entries to the upside. Okay, so for you guys, I wouldn't allow you to take an entry and just leave runners from a premium area. For me, I already have runners from this side. If I leave this runner running, which is also running, because I told you I am targeting 530 pips right here. I'm targeting slightly above 530 pips, but 530 pips is what I'm targeting, and that's where I'm going to stop it at. So I'm going to this specific runner, I'm going to close it. I'm going to leave the other runners, but this specific runner, I'm going to close it. Why? Because I did not like this structure at all. I did not like this structure. So what I'm going to do is, because I know if the market now retraces after it does this, when the market now will be retracing, it's going to take this slightly, then it's going to start retracing. Where is it going to retrace to? We might see it coming into this order block right here. Okay, we're going to see it coming. It's highly probable we're going to see it coming into this order block. Mind you, there's also this liquidity, these equal lows that are right here. So the market could even decide to come in to take these lows right here. I do not regard this as a low that has been created, as a good fine low that has been created. So for me, I wouldn't allow you to leave runners right here. But for me, I'm leaving a runner because I have this as my target while I have my other runners running. You always know I leave runners. So structure, market structure, okay, play with market structure, and market structure will always favor you. Okay, that is US tech. Now let's go to Bitcoin. And let me explain to you why I always give you the entries. Mostly I give you entries during the weekend. By this period, I gave you a Bitcoin entry before the weekend, right? I actually gave you a Bitcoin entry before the weekend. I gave you the Bitcoin entry. How many days to? I gave you the Bitcoin entry. I think, was it yesterday? I gave you the Bitcoin entry yesterday. My thesis isn't mainly based on 4-hour time frame. So I'm not really focused on the 4-hour time frame. But there's a problem with Bitcoin. When there's wars, the market usually just keeps going down. But my thesis on Bitcoin is based on, okay, it's based on this the weekly time frame. Okay, my thesis is based on the weekly time frame. In fact, I'm supposed to close this trade right now because I expect it to come into this order block, because you can see it is trading below the point of control. And not only that, look at the behavior below the point of control. So many times that the market has been trading below the point of control, it has actually come into, you can see it came into this point of control, it came into this value area low. Okay, it came into this value area low. So I think I'm gonna, but I'm not really focused on closing this trade. I'm gonna leave it to see the behavior that it's going to take at this half point right here. Okay, this midpoint right here. If I don't like it, I'm gonna close this. I'm gonna take. Okay, I told you to get an account, Yellow Card or Binance. Yeah. So look at this. Clearly there's this fair value gap right here. There's this fair value gap. We can see that there's this liquidity that has been generated. The market is going to keep going to the upside. That's something that we can take note of. This reaction that you're seeing happening here is based on this trend line. But what is happening? There's this trend line that is here. There's so many traders who are going to now start cutting their buys. Okay, so many traders are going to start cutting their buys. But why should you cut your buys when you can be sure that the market is actually going to still keep, it's still very strong. Okay, the market is still very strong. It's actually still going to the upside. Look at this. This is just a minor retracement into this order block. We're just getting a minor retracement into this order block and this fair value gap, this weekly fair value gap. I told you the median point of the fair value gaps is always the important point for me in the markets. Okay, it's always the most important point for me in the markets. So if you look at this clearly, you're going to see if the market, once the market touches this median point of this fair value gap, we're going to get a reaction, we're going to get a rejection. In fact, it's about to touch it. Okay, it's about to touch it. If we don't get a rejection and a straight breakthrough, I'm going to close this trade. I'm going to cut my losses from there, and I'm going to let it come into this point of control where I'm going to get back in. Okay, I'm going to get back in. But yeah, so as for Bitcoin, easy. I expect it to still go to the upside. I expect it to take this liquidity that is right here. So many times when the market you see generating such a pattern, and then we're getting our reaction from this zone, you can expect now the market will just come like this. Okay, we're going to see a slight retracement, which is going to create a change of character, because a slight change of character, because it's going to now create a lower, it's going to have created a low. If it starts pushing to the upside, it's going to have created a lower high. Okay, it's going to create a lower high, which is now going to propel this market to the upside, and then now we're going to see it coming to take these highs. Okay, all these highs that are right here, we're going to see the market coming and take those highs. Simple as that. Bitcoin, as I told you, I'm still focused on the upside. So here's one thing that you need to take note of. Here's one thing that you need to take note of. Most of the time, when you're trading with a volume profile, you'll take note of this blue box that is always created in the volume profile. This blue box that you always see here. So when the market touches above, it breaks above the value area. It breaks above the value area high, goes and touches the blue box. The next time you're going to expect it is you're going to expect it to come into this blue box right here. You're going to expect it to come into this blue box right here, this blue box under here, and then continue now to the upside. That's why gold, I told you, it's still going to come into, it's going to come up to here. So with Bitcoin, if it decides to break here, I'm monitoring this zone. If it decides to break this zone, I'm going to monitor what is the behavior of the market around this point of control, this value area low. If the market doesn't reject this value area low and we get a close like this, okay, you can see this was a close below the value area low, I'm going to just I'm not going to take a trade from here anymore. I'm not going to take a trade. I'm going to let it run, because I know the next point I'm going to see this market is within this fair value gaps right here. But I'm really going to expect it under here, and then I push the upside. So that's with Bitcoin. There's two probabilities. There's always two probabilities. Yeah, always trade safe. Always manage your risks. And yeah, I hope you have a great day. Okay, and trade profitably. Use market structure. Learn the market structure that I've told you. Use NASDAQ. Okay, you can trade Nasdaq futures, you can trade, okay, as long as just have 2 PD arrays, that's enough. Two PD arrays is enough. You don't need more than 2 PD arrays. Okay, 2 PD arrays is enough. Trade on a higher time frame. Trade on get confirmations from higher time frames. Then you can trade on lower time frames. You can just seek lower time frames to just see, maybe look for patterns within that area. Let's say you're looking for, let's take an example of okay, right now we're on the 4-hour time frame. Let's take an example of what happened right here. Okay, let's go to the 15-minute time frame. Though today I did not touch the 15-minute time frame on Nasdaq, but let's just look at the behavior of the 15-minute time frame on Nasdaq. Maybe we might see something that might be of interest to us. Okay, right here. Okay, we got strong volume pushing to the upside. We got strong volume pushing to the upside, a close above this zone that I had told you, then a break back into this structure, a retracement back into this zone right here. Okay, a retracement back into this zone where we made our entry, and then a drive to the upside. So it's simple as that. But there's not a lot that I can see that happened. I wasn't really focused on the 50. I did not even open the 15-minute time frame on this Nasdaq trade that we took today. I did not open this, and I think even the previous entry I also used the 4-hour time frame. There was an entry I took here. If you remember it, we took the NFP entry from here. I also used the 4-hour time frame because I also trust 4-hour patterns. This entry right here also, it was 4-hour time frame. Yeah, 4-hour time frame. The entry that I took around this zone, it was a 4-hour time frame entry. So that is how you make your entries. Do not get into this entry. Okay, do not get into this entry around here. Do not just let me drive my runners, because I expect, as I've told you, the market could still decide to come drop into this zone. We might see it coming into this fair value gap. That one has been mitigated into, so we're going to focus maybe on this one, or a full tap into this like this. Sometimes the market just taps into this order block like this, and then a continuation to the upside. Now coming to break this area right here, this high that was created, and then a continuation to the upside. So that's why I'm telling you, I asked you, I just told you our target is going to be 190 pips, strictly 190 pips, and that's what we targeted. Okay, we closed in fact at 192 pips. Okay, this was the target for you guys. I didn't want you to go above this zone. Okay, this was the target for you guys. I wanted to see if the market could drive above this order block right here. We see the behavior around here. So for you guys, I told you this would be the last point we're going to expect the market, and then if the market breaks above this zone, maybe retraces, breaks above this zone, maybe we get a retracement, maybe a slight consolidation. Tomorrow we might buy to the upside. We might continue buying to the upside. That entry I will give you guys, don't worry about it. I'm going to give you guys, as I told you, tomorrow is another day. We're going to catch more pips. Have a lovely night. Let me now go grab a bite.